Welcome to the Poundcast, the Digital Pound Foundation's podcast, dedicated to explaining and discussing all aspects of a digital pound and the impact of new forms of digital money. Your host today is Jannah, Policy Lead and one of the originating team of the Digital Pound Foundation. Today, Jannah speaks to Sarah Palurovic, Executive Director of our partner organisation, the Digital Euro Association. Sarah is also an economist and research assistant at the Frankfurt School Blockchain Center. Her focus is on executive education in blockchain and digital assets, specializing in the economics of cryptocurrencies and emerging business models. Today, Jannah and Sarah discuss progress towards a digital euro as well as a digital pound. How do these compare, and what impact will they have on one another?
Very pleased today to welcome Sarah Palurovic from the Digital Euro Association. It's great to have you here, Sarah, and I'm looking forward to hearing all about the latest advances in the digital euro in both the public and the private space.
Thank you, Jannah. Thanks for having me here. And as some members of the audience might know or not know, the Digital Euro Association and the Digital Pound Foundation actually have entered a membership quite early on. I think it was last year that we first started. And this has always been our way to go in the partnership, that we update one another on what's going on in our respective jurisdictions and anything regarding the digital euro and the digital pound. And I think that's what we're going to do today, as you already mentioned.
Absolutely, yes. And it would be great if you can tell us a bit more about yourself and your work at the Digital Euro Association and the aims of the Digital Euro Association. You guys are about 18 months, I think, further along than we are in terms of when you were set up, and also in terms of where the EU is in its stages of developing a digital euro. And so it's really interesting to look out at what you're doing and what's happening in the market around you and think about where we might be in another 18 months' time. But first, tell us a little bit about yourself and your work.
Yeah, for sure. I'm Sarah Palurovic, and I'm an executive director at the Digital Euro Association. And even though there would definitely be enough work at the DIA for a full-time position, I'm actually also a project manager at the Blockchain Center in Frankfurt for the Frankfurt School of Finance and Management at the same time. So I'm not just looking into the digital euro, but also into crypto in a more traditional sense, which is kind of a weird thing to say, right? Because one would say or think that the CBDC side of things, so the DIA work, would be considered the more traditional version of digital money, certainly. And yeah, that's how I got into the whole topic. And the DIA, like you said, we would like to say we're further along because the DIA was established earlier, but I don't think it's fair to draw that comparison just yet, which brings me to a really important point that the Digital Euro Association is actually not affiliated with the European Central Bank in any way. If anything, we, as a think tank and with the aim of being as objective as possible and gathering all the information out there, all the tech providers out there, bringing everybody to one table to sit down and discuss how could interoperability work, how could matters of privacy be resolved in a desirable sense for the general public, for example. So we discuss all sorts of digital money related questions specifically on the digital euro at the DIA. We also showcase tech solutions, for example, and our vision is basically to get rid of the noise and kind of see where the direction is headed. That's what we aim to do. And we like to play devil's advocate at the same time, sometimes when it comes to everything that the European Central Bank is putting out there. With that being said, of course, the DIA doesn't just focus on CBDCs, but also on stablecoins and commercial bank money tokens and other more niche topics, such as the regulated liability network and everything that's basically happening next to the CBDC of the European Central Bank.
So tell us a little bit about where we are with a publicly issued digital euro, so a euro CBDC at the moment. I know that Fabio Panetta recently gave a speech updating on progress and plans. What was revealed in that speech?
Right. So as we speak, which would be in Q1 2023, we actually just had, as you mentioned, Panetta's speech that was in January this year. He gave it to the European Parliament's Economic and Monetary Affairs Committee on the status of the digital euro. And he basically said, this is what has been decided thus far. This is where we are in the investigation phase and what will be decided until the decision whether to move forward to the realization phase of the digital euro in Q3 this year will need to happen So including testing technical solutions, for example. And so he mentioned some of the main features that we already knew about. So that the digital euro will serve as an additional payment method using public money, that basic services will be free. So this will likely be settlement and sending money abroad, because cross-border payment, as we've learned at the end of last year, when the report on what has been decided on has been released, this is something that they were focusing on more than we previously thought. So cross-border payment next to e-commerce payment and peer-to-peer payments has been a bigger priority now. And Panetta also talked about the supervised intermediaries. So he actually said it would be banks and non-banks that can then offer additional products based on the digital euro. They're actually currently discussing exactly this is what they're currently focusing on. And he also very interestingly said that the ECB will not have access to personal data. And this point I find very interesting, because we also know from the report approximately released in November last year that the ECB will have more insights into user accounts than just the commercial bank account balance that a commercial bank holds. So the question is, what does this mean right now, right? Because on one side, Panetta say the ECB will not have access to personal data. On the other hand, we know it will be broken down more, or in some way more revealing than just a general account balance. So a lot of those open questions, and if you were to have a wall and put up all the papers that we currently have and all everything that was said, it's not always 100% clear yet where the direction we're going, what direction we'll take, but it's being narrowed down more and more. And again, we expect a decision whether a Euro CBDC will even be realized in approximately September, October of this year. So certainly a very, very exciting year.
That's super interesting. And I like to pick up on a few of the points that you raised there. But first of all, I just want to clarify for the benefit of our audience. When we talk about a digital euro at the moment, or a publicly issued digital euro, we're really talking about a retail CBDC, right? That's what the ECB is exploring at this point in time, correct?
Right, yeah.
So that's going to be for the use of businesses and consumers in day-to-day type transactions, as opposed to a wholesale CBDC, which is more for interbank settlements. And I know we said we wouldn't get into the comparisons with the digital pound paper that's been published, but actually there's very obvious comparisons there. First of all, so again, many of our listeners may or may not know that the Bank of England published their consultation paper on the digital pound last week at the time of recording this podcast. And in this paper, they also made some very similar statements. So the UK is also exploring this platform model, as they call it, which involves the central bank itself doesn't actually open any accounts directly with the public, but rather it's the issue of the CBDC. And there are then a number of intermediaries, which can include banks and non-banks, the payment interface providers, who actually open wallets and accounts for the use of the public and provide all those consumer-facing services, and then can use that as well as a platform for developing new products and services and hopefully innovating in some interesting and unexpected ways. They made a very similar point about privacy as well. It was very carefully worded, I think, which was that neither the central bank nor the government would have visibility of consumer data, but they also spelled out that they did not expect, this was not going to be an anonymous solution, obviously, but they did not expect that there would be any more invasiveness to privacy than in the current bank account system. And I think actually, we'll go back to you on this in a minute. The challenge with a lot of the privacy stuff is that most people don't understand how much is actually visible and accessible at the moment. And just because the data is held by the banks and the payments service providers and things like that doesn't mean that the government can't access it when it needs to, subject to the right court orders and legal routes. All that data is accessible. The point is that it's not visible on a day-to-day basis, and it can only be accessed under specific legal circumstances. Is that how you see the digital euro potentially working as well?
So in one way, I would completely agree, in the sense that I think the general understanding of how accessible financial data is a bit off, let's say, from what it actually looks like. On the other hand, if you look at a CBDC as a form of not off cash, but basically the digital complementary version of cash, then I understand if people say, okay, the same privacy measures should be applied, and thus any type of insight that you have into my CBDC account is too much, because cash essentially is the only peer-to-peer transactable type of money that we currently have. However, if we look at it from what state as the European Union is looking into, or the European Currency Union to be specific, they're also looking into using a CBDC to pay out social services, social aids, and so on. So for that to happen, a certain level of transparency must be given in order to check documents and files and identity-related questions that are the prerequisite for the money to be paid out. So the coin has two sides, basically, the whole matter of privacy. On one hand, digital cash should be anonymous. And there you have the whole discussion around having certain threshold of until what point cash or digital cash, such as a CBDC, would then be anonymous and fully untransparent. And this is actually what's also being discussed at the ECB right now. But the way that they're currently coming about the number or the limit of how much money you are to hold, and also how much money, so in CBDC, you can spend with a certain anonymity threshold, let's say, is very rudimentarily calculated. So, for example, for the limit of how much CBDC euro you're supposed to be holding as the limit after which the money will flow into your dedicated bank account after and will not be considered a CBDC anymore, was taken by how much cash there was in circulation in the Eurozone, and then divided by how many citizens the Eurozone had, coming up to around 3,000 euros per person. So these are all very, I wouldn't say arbitrary numbers, but we don't know what the limit will look like just yet.
Yeah. And let's talk about a few of the other characteristics of a Euro CBDC. So would you be anticipating that it would be interest bearing, for example? In the consultation paper last week, the Bank of England was explicitly clear in that it didn't anticipate that a digital pound would be interest bearing. And this is quite interesting because many economists, for example, have been quite excited about the potential of a CBDC in more effectively transmitting monetary policy across the economy and things like that. And so setting out, very clearly upfront that this is not going to be part of the design is actually a significant statement. What's the thinking on the digital euro side?
That's a very interesting point as well, because that would turn a CBDC into a financial instrument. So if you have tiered remuneration of some sort, and even though right now it doesn't look like they would introduce a CBDC that has tiered remuneration right off the bat, what they are saying is that we keep the possibility open for tiered remuneration to be introduced later on. Reason being is, for one, that the ECB wants to have measures that will incentivize or disincentivize people to hold more or less CBDCs. And the specific way in which they're looking into it right now is to have negative interest rates as soon as a certain threshold is hit. And then either tiered remuneration to disincentivize people, or you have money flowing from your CBDC bank account into your regular bank account, making the money not CBDC anymore. So definitely something the ECB is looking into, but let's say that would be the more tedious approach to making sure that there's a threshold of how much citizens are actually holding in Euro CBDC.
Yeah. And of course, the main driver for introducing concepts like having an interest-bearing or non-interest-bearing CBDC, or introducing limits on the amount of CBDC that can be held, is to prevent massive outflows from the commercial banking system. While the Bank of England's been quite clear that it doesn't, and I paraphrase heavily here, its purpose is not to continue propping up the business models of commercial banks. Its purpose is to ensure ongoing financial stability, and massive outflows from the existing financial system would lead to destabilization, obviously. And I think that's an area that many banks around the world, commercial banks that is, have used as a means of protesting against CBDC, the fact that it does actually pose a potential threat in terms of outflows and things like that, and therefore impacts the ability for commercial lending and credit creation and all those engines of growth in the economy at the moment, and whether or not those are good engines of growth, this is probably a separate conversation altogether. But what is the reaction of banks in the Eurozone to the potential introduction of a retail CBDC?
Yeah, that's a great question. I think it's the same that you're experiencing in the UK currently, so that a negative interest rate could reduce confidence in the euro's public money, and thus also structural disintermediation is definitely a fear that banks voice, just because the store value function becomes unattractive, which is essentially their business model currently. On the other side, we'll need to wait and see what the proposed, often quoted new business models will be at the end of the day, if there's any new leg of business use case for banks that they'll actually prefer or take on risk-wise, and depending on how they'll see the potential of those new business cases, whatever they may look like. Yeah, it's definitely hard to say.
And some of our regular listeners may know that something we discuss quite often on this podcast is different motivations that different jurisdictions have for introducing a CBDC. Sweden, for example, the Riksbank is trying to address the decline in cash usage, the most significant decline of any nation, really, and fundamentally believes that the public should have continued access to publicly issued money. Other jurisdictions, their main motivations might be improving the resilience and stability of their payments infrastructure or financial inclusion or things like that. But I think in the Eurozone, we've seen that amongst the drivers is a very clear political one, which is greater market integration and greater financial integration as well. I guess a two-part question for you. First of all, what are the other motivations for introducing a public digital euro? And secondly, what's the public reaction to the prospect of a digital euro as a tool for greater market integration?
Right. So I would split my answer into two. Let's first look at the European Central Bank's geopolitical drivers and motivations to release a digital euro, which I think is the more interesting aspect. And the reason being is that there's no such thing currently as a market failure. If you look at the means of payment that we currently have, we use PayPal quite frequently. Then you mentioned currently the Swedish pendant basically to PayPal and so on. So different providers of e-money in the Eurozone. And the goal of the European Central Bank with the digital euro is to have a pan-European solution for it. Because if you think about it, PayPal is an American company and you have all those non-Eurozone native companies setting up camp and market share when it comes to those e-money providers. And the European Central Bank is really trying to get their share of that cake. Also, again, that will be the second part of the answer, basically, have the principles and motivations that are driving it for the citizen side of things, for the retail CBDC, that is. And the central bank says that it's to preserve the role of public money as the monetary anchor for the payment system. And they're really clear on that it's supposed to complement cash and not replace cash altogether. So quite similar, I would say, to how the UK sees it.
Okay. And what is the public reaction in general so far to the prospect of a digital euro? I know in the UK and in other jurisdictions as well, the public reaction varies generally. There's general confusion. Like, I suppose over here, referring to it as Bitcoin doesn't really help because people think it's some sort of government issued cryptocurrency. On the other hand, people are obviously also very concerned about privacy, and that's something they've addressed as well. And in the potential for the government to reach into your wallet and repurpose or take away your funds. Does the public in the Eurozone have similar concerns?
Definitely. I mean, those are overarching, not just on a national level, I would say. And some of the ones that we get, let's say, confronted with almost on a daily basis. What about this aspect? About the CBDC. So basically the fears of CBDCs and what they could mean. We've identified some of those and came up with a CBDC Manifesto. That's what it's called, the CBDC Manifesto. And that's reiterating those points and addressing them and basically saying how could these points be resolved. And one of them could be the fear of the CBDC not having a strong value proposition. So why would I use the CBDC unless there is a clear value proposition, no fees connected, for example, or very user-friendly or incentivized otherwise? And That was one of the points that we've identified. Then another one that's raised very often in the Eurozone specifically is high privacy guarantees. How can this be ensured? How can a CBDC be protected from being misused as a government supervision tool? This is, of course, a fear that you see everywhere, not just on Twitter. And there, the manifesto talks about that a CBDC should supply technically guaranteed privacy by design and by default. So without the need to trust the central bank to preserve privacy. And the transparent design, and also basically the white paper, if you want, whether it be DLT based or not, would need to be revealed in order to make sure that this point is reached. And then you have other points that dip into the ones that are already mentioned. So, for example, that a CBDC isn't supposed to do harm to society in any way. So we already talked about negative interest rates, then also the possibility of programmable money, restricting the use of money for specific types of purchases. So think about if money is transferred for food or computer games or child support, for example, what can you actually spend the money on? And also, of course, very important is, and that's coming back to the whole concern topic, is basically how do you include everyone that's going to be using the CBDC and those that are designing it at one table, and how do you get everybody's opinions, and how do you define the governance system and so on. And they're currently, the central banks, for example, conducting studies where they question the general public on specific questions that are still open, and a discussion on how they think certain matters, for example, on privacy should be handled, and they take it back. How exactly that process works, whether it's the most efficient, whether what is meant when we say get everyone together at one table, how representative, that's a different discussion for sure. There has been criticism that has been raised against how these are conducted, but they do take place. That's what we can say.
And programmability is a really interesting one, and quite a controversial one as well, because it's that programmability access capability that kind of gives rise to the perceived ability for the government or the central bank to control the money in ways that the holder might not necessarily want. But there's a difference between programmable money and programmable payments. And I know many proponents of CBDCs say, payments are to an extent programmable at the moment. The real innovation here is in the programmability of the money itself, and having money that can be used in completely novel ways. Where do you stand on that debate? Are you more in favor of programmable money or programmable payments? And what do you think are the benefits and the disadvantages of each?
Great question. I would say, even though this isn't a definite answer, I see why you would have both. I think both have their place in a way, but definitely programmable money in the current state, because this is where the pay-per-use business models are going to be enabled. For example, there's one company that I find very interesting where they have tractors that run based on the minute that you pay them on. And say you have an insurance case, then the insurance claim is being paid out to you immediately, almost in real time. And only digital or programmable money could enable this, because programmable payments are already out there, but it would simply take way longer and include actual humans to interact with the protocol and making sure the claim is what it is in the case that insurance has to step in for the tractor and so on. So truly the lack of human intervention and double checking and introducing sensors to gather data and verify information, that's for me where programmable money is coming in handy. And then, of course, as you already mentioned, all those social welfare payments that you could make that certainly also have their benefits. Yeah.
And I think we also have to remember that actually we've talked about all these potential features and functionalities of a publicly issued digital euro or publicly issued digital pound. But in actual fact, we're more likely to see an ecosystem of both CBDCs and privately issued digital money, whether in the form of tokenized deposits and tokenized commercial bank money, tokenized e-money, or other variants of the stablecoin world. And these might compete based on offering different features and different functionalities, and some of them might be programmable in different ways and things like that. What do you think we're likely to see first in the Eurozone? a privately issued digital euro I guess we do have at least 2 privately issued digital euros in existence at the moment, but which do you think will be adopted more quickly by the mainstream, a publicly issued digital euro or a private one?
That's a very difficult one. In one way, you can say that the PR department of the European Central Bank, though, of course, a public player, has a bigger pull over a small startup that's just going to launch a private digital euro, such as a stablecoin right now, for example. But then you also asked about in general. So there, I think that the crypto community has understood more so why we would need this type of money. So, for example, right now, the Finnish startup, I think Membrane Finance is what they're called. They've just launched their euro stablecoin since the MiCA draft has been passed. That will come into power beginning of next year. So that'll be interesting to see how that will play into how many new stablecoins, euro-denominated ones, we see that are issued inside the Eurozone. That's a whole different topic again.
Because of course the other one is Circle's euro stablecoin, but that's not actually available to users within the Eurozone, is it?
Yeah, it's a very interesting setup indeed. Yeah. Then you also have the question of what will the CBDC be used for? What will the stablecoin be used for? Of course, you could say, okay, the CBDC can either be, depending on its design, it might be able to be wrapped, or you have a stablecoin that is then representing the CBDC that can then be brought into DeFi, and then that's somehow adopted, even though I don't think diehard crypto fans would actually use the European Central Banks.
I think once you're into the DeFi world, the whole point is that you don't necessarily want that connection back, do you?
Yeah, indeed. So it will be more for those cases that we already talked about, such as pay-per-use business models and machine-to-machine payments. So I think it's just very different user or target groups and user groups that we're looking at. I don't know that you can make the point that one will be adopted more or less. I think it depends on where it will be adopted.
And what do we see happening in the pipeline of activities around the public digital euro for the remainder of the year? Just to close off on what's the timeline for this year and beyond in getting in that feedback and deciding what the next stage of development is and in taking things towards a live pilot?
Right. So right now they have just closed the application phase for applying for the rulebook scheme that will be set up for the digital euro specifically. Will be interesting to see because this initiative is running very much in parallel with the payments initiative, if I'm not mistaken. And they're just using a different settlement asset. So I hope that there will be some collaboration on that end. Then, as already mentioned, end of 2023, approximately in October, the governing council will decide whether to move on to the realization phase. That's certainly also another very important date to remember. And in between, there will be considerations regarding cross-border payments. So that will be a very hot topic to watch this year. And then also the whole privacy concern is also on the agenda of the ECB.
Sarah, thank you so much. It's been a fascinating discussion and really useful for me as well to catch up on what's going on with the digital euro. And we hope to be hearing more back from you in a few months' time.
All right. See you back shortly. Jannah, bye.